Today, we need to talk about existing home sales, the home buying season, record cancellations, and yes, we'll even talk about record credit card debt. What we're going to talk about today, first and foremost, is I'm sorry I'm a couple minutes late. I am running around pretty frazzled this morning. Obviously set up in the Mountain View studio and nothing worked right this morning, but we are back at it. Let's get into the news. Let's first talk about home buying being brutal. First, I want to remind you that earlier in the month, and I think it was actually late last month, I highlighted that I believed existing home sales would fall below the 4 million mark, right? We crashed from 6.2 down to roughly 4.2, 4, we bounced around there. This Thursday, we get existing home sales. We're going to see how I did. I actually wrote over here my expectation for existing home sales on Thursday, 3.85 million, substantially below the 4 million threshold. I will say that the experts think I am wrong. The experts actually believe that existing home sales on Thursday will go up from last month. We'll go from 4.07 to 4.1 million. Folks, if existing home sales go up when we had 7% mortgage rates last month, I don't know what to tell you. The economy is, I guess, stronger than we all expect. I don't see it. Maybe more people are trading down, right? They're going from the home to the townhouse or the home to the condo. But I don't know. If you want to play along and you want to get a chance for the Nailed It t-shirt, take a guess. Existing home sales this Thursday. Go ahead and drop a number in the comments. I will go through them. And if you happen to get it, I'll mail you a t-shirt. How about that? So again, pretty crazy. Let's just remind you about how brutal home buying is today. Specifically, first-time home buyers. Number one, median home payment today with expected interest rates and the median home price is up 13.9% from last year. Yes, all of those people that were waiting last year because of this epic crash that they think is coming, congratulations, your payment is 13.9% higher. So again, housing is about payment. We talk about median home price. We talk about all of these things. It's payment and affordability. Remember, we gave you a great example of Las Vegas a couple of weeks ago. When you need to buy a home and you don't qualify for the median home in your area, what could you do? A, you can keep renting. B, you could stay living at home. Or C, you could trade down. You could make your first home a condo or a townhouse. That is why in Las Vegas, condos and townhouses are now at record high, where houses are getting soft. Remember, it's about payment, not only price. Next, demand. You know what, folks? Supply and demand works. Affordability works. Demand is down 9%. But remember, supply and demand. Active listings. Supply, just between you and me, down 17%. This is what the crash bros don't understand. Demand, down 9%. Supply, down 17%. And oh, by the way, if you actually take the time to look at your housing market, you draw a line at the median home sales, even active listings being down 17% does not tell the story. Does not. We are starting to see the luxury above the median stack up while entry level is disappearing. These are facts. You can't argue facts. Look at your buy box. So again, demand down, 9%. Listings down 17%. And again, that does not tell the whole story. How about new listings? You know, folks, all of those people that are desperate to sell, gotta sell, Airbnb bust, unemployment up, yada, yada, yada. New listings down 7.1%. This fear, this doom that people are putting out there is for them, not you. Do the work. Look at your market. Stop listening to idiots that have done nothing. Pending sales down 12%. Folks, we're repeating the early 80s. Transactions are going down. They're going down. I don't know what to say. And then finally, median home price. Up 3.9%. Folks, about a year ago, I tried to educate everybody on median home sales. Let's try to do it right now. Hopefully you can see this. Let's pretend for a minute. You know what? You know what day it is, right? You know it's September 17th. Let's get rid of that. So let's draw 11 little ticks, okay? One second. We're gonna try to help you understand something. All right, so there's 11 ticks. Now you got to remember, we're talking median home price. When you hear median, you should think the middle. So in a series of 11, number 6 is the middle, right? 1, 2, 3, 4, 5, 6. Okay, now this is important. Remember what I keep saying. Below the median is disappearing. Above the median, you can write disrespectful offers and get great deals, right? So in theory, this is ranked cheapest to most expensive. Now watch what happens. Watch what happens, right? Remember, transactions are falling, right? So we have a series of 11. We're going to go to 5. We're going to go to 5 in this simple example. But what happens? Well, that goes away. That goes away. That goes away. And that one goes away. And oh, by the way, 1, 2, 3, 4. That one goes away, and that one goes away. So now we have 5 ticks. We got lots of good discounts here. We have no inventory here. Guess where the median home sales is now? 1, 2, 3. This is gone. It's now here. That is how median home price can go up, transactions can go down in a broken housing market. All right, let's get into it because we got more stuff to talk about. How about all the doom about record credit borrowing and, you know, $1 trillion this, $1 trillion that? Yes, we have record debt in the U.S. households. No question. Record debt. Remember, it is about payment. Record debt at abnormally low interest rates is not a problem. If you borrow $1 million at 20%, you got a problem. You borrow $1 million at 0.1%, not such a problem. So what do I mean by that? You need to look at debt service. You need to look at disposable income. And on both of those, disposable income, debt service, our payments are below trend and definitely below the housing crash of 2008. Lots of people want to create fear and help you understand that the world is ending, so they make money on you. Yes, I am here to tell you the economy is going to get rough, but let's at least talk about it in reality, what is really going on. In today's environment, I wrote this down. Actually, it might have been Saturday's numbers. I think I go from, I'm going to report it on my Saturday. Record percent of disposable income, payments. It peaked in 2008 at over 10%. Today, it's roughly 6%. Trend is 7.5%. So again, when people throw out big numbers, talk about record this, record that, ask yourself, what's the payment? And oh, by the way, incomes have started to go up in real terms, not only nominal. Why is that important? 86% of our debt is fixed. 86% of debt is fixed. So if you are making more money, and by theory you have more disposable incomes, your payments get better. That is not everyone, obviously. But let's understand reality versus the scary headlines. How about Dave Ramsey? Dave Ramsey talks about secret millionaires. It was a wonderful article. Shout out Dave Ramsey. It's kind of reminded me of the Millionaire Next Door. But let's give it. There are 3 things that Dave Ramsey can spot. Dave Ramsey thinks he's been doing this long enough, and I believe him, so I'm not questioning his ability. I'm sure he can do this. Dave Ramsey can spot a secret millionaire. 1, they don't splurge on name brand stuff. They don't wear the logos, the brands, all of that. Number 2, they understand how to delay gratification. Folks, I keep telling you, getting wealthy is simple, but it does take 10 years of delayed gratification. Number 3, they start saving and investing early. Lots of great truths from Dave Ramsey in that, so something to pay attention to. Oh my goodness, oh my gosh, this one scared me. This scared me. Lance Lambert, shout out Lance, Thursday guest, great guy, Fortune, News Lambert, all that stuff. He reported that Morningstar is calling 4% mortgage rates in 2025. Folks, 2025 will be here in about 15 months. I ask you, what has to break? What has to blow up to get 4% mortgage rates in 15 months? My answer, I don't want to find out. I don't want to find out how bad things have to get Jerome Powell killing the Fed put to capitulate. Because again, that mortgage rates at 4%, I mean, come on. Oh my God, that would be so bad. That would mean the 10-year note would have to be about 2.2. Think about that. And, oh, by the way, the Fed would have to cut about 300 to 350 basis points. Again, I ask you, be careful what you wish for. How bad would things have to get a 4% mortgage rate? And my only answer is, I don't want to find out. My hope, my wish is that mortgage rates for 2025 are about 5.75 plus or minus. Let's just keep this thing slow and steady, go sideways. Let's churn through, who's ever in trouble, bust them out. But let's not go wild like a chart, whatever they call that, pulse or whatever. Let's not do that. Cancellations. Folks, I'm telling you, the housing market is broken. It's just broken. Cancellations for the month of August. 60,000 contracts were canceled. That's 15.7%. This is according to, gosh, did I write it down? I think this was a Redfin report. Redfin reported 60,000 cancellations. That's 15.7%. That's a lot of cancellations. So again, at the end of the day, when I think about what's going on in the housing market, this is my thesis. 1, demand. The longer rates are above 7, demand falls. It has to. Affordability is undefeated. You're going to sit on the sidelines. 7% is bad. You're going to wait for 6%. All good. Totally cool. Wait. Fine. Let's keep 7% for the rest of the year. Let's just get this thing. Let's just get to the bottom of transactions so we can build from there. Demand falls. Inventory. If demand falls enough, and I hope it does, inventory will start to build. But what kind of inventory? Is it the inventory above the median? Is it first-time home buyers? We're going to find out. My gut says above the median, but we need to find out. And then the most important number for me and probably most investors days on market. I believe last time days on market were reported were like 18 days. It might have been 21, something like that. Days on market have to go to above 40 days. That's the average or the median. So there'll be some at 100 days. There'll still be some that sell quick. But folks, the market has to slow down. Why is this good for me? I am very clear with you. I am seeking motivated sellers. And if you're an investor, I strongly suggest you seek motivated sellers. When you find motivated sellers, you can get better pricing. You can sometimes get terms. You can sometimes get both. It takes work. It takes discipline. It takes focus. It takes stop reading the headlines and do the work. It's that simple, folks. So, what am I so excited about today? Today is day 1 of the 10-day boot camp, the one and only. Yeah, it's going to be the one and only. The one and only boot camp, day 1. We are going to talk about picking a market. Some of you have a market. Many of you don't. So we're going to talk to everybody in the boot camp who doesn't have a market, and we're going to ask them questions. My hope is the 12, the 15, the 18 folks that are part of this big group that don't have a market, we answer any and all questions. Our next meeting will be sometime late next week, probably on the weekend. We'll talk about building a buy box. But today is about folks who don't have a market. Hey, I live in San Diego, can't invest here. What should I do? Hey, I live here, but I don't. It's going to be an awesome day. I look forward to this. It's going to be amazing. We're going to help some people, and we're going to record it. If you are in the boot camp and you can't make our Sunday session, don't worry. I will record it, and it will be uploaded to Teachable later today. Maybe tomorrow if I have to cut the file. But in the next day or so, it will be up so you can enjoy it and rewatch it. It's yours. You have the boot camp. It'll be there listed as day 1. Next week, we're going to get into the buy box. So again, folks, we're doing 10 days. And remember, the first 45 minutes, we will answer all the topic of the day. Then, if you're on, you can ask me any question because we're going for 2 hours. And then next, VIP. Folks, we're holding this event in Vegas. It is going to be awesome. I'm so excited. We've got 11 speakers, some surprise guests. We're going to celebrate one rental at a time. We're going to give you a concert. We're going to feed you. We're going to do all of these things. VIP, 50 seats sold out in 2.5 days. First, thank you very much. Many of you have been with me for years and you have been waiting for this event and you bought tickets quick. Thank you. Several of you, about half a dozen, said, Michael, I was late. I was waiting for the weekend. I want VIP, all of that. I went ahead and worked with the event center, and we've allocated 15 more spots. Folks, if you want VIP, buy it today. It'll sell out. It'll probably sell out today. Enough of you have asked for VIP. Again, $4.99, fed lunch, meet the millionaires, talk to the speakers, all of that stuff. Buy it today. But don't worry. Again, general admission is only $199. You're going to, again, get to hear all the speeches. You're going to get to ask questions. You're going to get the concert. You're going to get the party. You're going to get something like, 8 to 10, 14 hours plus 8, 22 hours of content. $199. Go ahead and sign up. I'll put the link below. It's on Eventbrite, February 17th, February 18th. And then finally, it's been a week. It's been 7 days. And I will highlight that this is the first time in a long time no one has bought the course, How to Get Started One Rental at a Time. $3.99, access to the Facebook group, all of this great stuff. I just noticed that I don't talk about it a lot, so shame on me, I don't advertise. But if you want to change your future, you want to do the work, you want to get a buy box track, take advantage of the market that is coming, it's slowing down. $3.99, you can check it in the link below, my website, whatever you would like. Now, I need to go get ready for the boot camp. I'll talk to you guys in a few minutes. Bye-bye.